Let's first talk about recent trading strategy, then make predictions for 3 upcoming earnings reports next week, and finally, break down whether it's a good time to get into Tesla. Market overview. The market has bounced back in the past 2 weeks, with the S&P 500 approaching 5,700. Next week, keep a close eye on whether it can hold above the 200-day moving average. If it breaks through 5,800, we recommend trimming positions and holding more cash while waiting for the next big move. 1. Palantir, the week's headliner. Will the stock continue soaring or stumble on high valuation? Let's break it down. Palantir is reporting Q1 2025 earnings after market close on May 5th, and it's undoubtedly the main event next week. Estimated highlights. Revenue, $862 million, a solid 35.91% YoY. Talk about revenue sprinting. EPS, $0.067, a whopping 66.75% YoY. Money-making machine. America's AI defense king. Palantir was once the go-to data brain for the U.S. military but has since gone mainstream thanks to the AI boom. Its business is rapidly expanding, and investors are eyeing its future dominance in defense and manufacturing. Their CTO has even become a frequent face in Congress advocating for American industrial revival, practically a tech lobbyist in a suit. Recent performance. Stock up 340% in 2024 and 60% plus it in 2025. Last quarter. Revenue 36% YoY. U.S. commercial revenue 64% YoY. 20% CAC growth blazing fast. What to watch this quarter? AI business AIP performance. Palantir's AI platform AIP is the growth engine, feeding internal company data to Elms and acting like a super smart business advisor. They even launched an AIP bootcamp to train clients, and it's showing results. The key question: can AIP keep attracting users? Government and international expansion. U.S. government contracts keep pouring in. 45% YoY revenue. Global clients from Europe and Asia are lining up. Customer growth. The number of commercial clients is crucial. Repeat customers equals recurring revenue. A slowdown could spook the market. Valuation, high and controversial. Bulls say the AI plus data combo has enormous long-term potential. Rapid expansion, impressive financials. One of the few software firms outperforming even in tough markets like MongoDB. Bears argue, way too expensive, sky-high price-to-sales ratio. In an economic slowdown, high volatility, high valuation stocks become a liability. Morgan Stanley even warned about a Davis double whammy: earnings dip plus valuation drop equals price plunge. Earnings volatility track record. Last 4 earnings days, expected move 14.2%, actual average move 18.2%. Roller coaster stuff. This time, options are pricing in a 15.36% swing. Markets ready for a thrill ride. Whisper, slightly bearish bias in implied volatility. Bottom line, Palantir has soared on AI hype, but valuation is no longer cheap. Q1 earnings will decide whether it gets rocket fuel or hits turbulence. Key factors. Is the AIP platform still a magnet? Any surprises in gov or overseas contracts? Can customer growth stay hot? Whether you're a Palantir believer or a curious bystander, this earnings call is a must-watch. Current stock price is nearing the Wall Street high target of $125. We suggest trimming positions before earnings, too. AppLovin, the AI ad king, returns? Tech investors are buzzing. AppLovin is about to drop earnings. This is no longer just a mobile game publisher. It's now an AI-powered ad juggernaut plus rising e-commerce ad star. Earnings, May 7th, after market close. Focus, will the ad business keep exploding? Is e-com ad momentum real? Will it shut down the short sellers? Q1 projections practically caffeinated. Revenue, $1.379 billion, up 30.28% YoY. EPS, $1.438, more than double last year. Last quarter, the stock soared 35% after earnings, hitting all-time highs. Then, boom, hit by Trump's tariff chatter and short seller attacks, it dropped back hard and started swinging. Advertising equals growth engine. Ad revenue for Q1 expected to be $1.04 billion vs. Street estimate of $950 million. YoY growth 70% plus. If that's not AI advertising beast, what is? Tech Edge, Axon 2.0 AI engine. Precision targeting, automated optimization. E-com bosses are loving it. Transitioning from game ad king to category killer across industries, profitability is explosive. Adjusted EBITDA margins 78-79, Translation: for every $1 in ad revenue, they pocket $0.8 insane efficiency. Gaming business? Say goodbye, selling off its legacy gaming division for $900 million cash plus equity deal closes Q2. Q1 game revenue expected $330 million, slightly down YoY. Why sell? Easy. Ads make more money. Why drag the old weight? E-commerce advertising equals new frontier. If they land deals with Amazon, Walmart, etc., AppLovin could write the next AI ad comeback story. But it's no cakewalk. High complexity, smarter tools needed. You need to be as smart as ChatGPT and as flexible as a top-tier waiter. What Wall Street says. Goldman Sachs expects a beat, strong moat, big e-com ad potential. BofA compares them to TikTok of ads, AI disrupting traditional marketing. Piper Sandler, price target $425, bullish on non-gaming ad expansion. Hot rumor, AppLovin wants to buy TikTok's overseas ops. If true, forget takeoff, this would be satellite-level liftoff. Earnings volatility. Implied move, 21.41. Average last 4 quarters, 24.7. Translation: if it doesn't move 20%, it's not acting like itself. Summary: AppLovin has the tech, the growth, the AI advantage, the momentum, but also faces shorts and stiff competition. Hold through earnings. We're bullish. Wall Street's price target, $473. 3. Hims telehealth rocket fueled by weight loss drugs. Hims and Hers Health reports earnings after the bell on May 5th, and investors are nervously excited. Why the hype? Because Hims is no longer just a trendy DTC shampoo or ad pills shop. Now, it's doing big pharma deals. Just announced a game-changing partnership with Novo Nordisk, maker of Wegovy. Street expectations for Q1. Revenue, $538 million, up 93.56% YoY. EPS, 0.1 to $1, up 142.4% YoY. Translation: this was a scrappy online wellness shop, now it's racing toward pharma Costco status. The big news: Hims announced it's officially partnering with Novo Nordisk to sell Wegovy, the blockbuster weight loss drug. Not just a link, a full integration. Members can access Wegovy via the Hims website, through NovaCare Pharmacy. All dosages available, plus full health support package. Previously, they sold a compounded version of semaglutide at 15% the price, and it sold like crazy. But in February, the FDA said official Wegovy supply is back, so generics are out. Now with an official supply deal, Hims goes from knockoff seller to authorized provider. Don't forget, Hims also recently began selling tirzepatide, Eli Lilly's blockbuster weight loss med, all brand name. They're becoming the go-to digital health platform for prescription weight loss meds. Market reaction. Stock jumped 45% this week, closing at 48. Investors are pumped. We like this setup and suggest holding. Short-term target, 50. Bottom line: Hims isn't selling pills, it's selling a vision of the future. Impressive earnings. Booming weight loss drug biz. Big pharma partnerships. Stock behaving like it's strapped to a rocket. One-liner: Hims evolved from a hipster drugstore into a full-stack digital healthcare platform plus pharma partner. They don't just offer online consults, they aim to be your health concierge. Finally, what's up with Tesla? You thought Tesla was just a car company? Nope. It's at a major turning point. Classic EV business on one side, surging energy and AI bets on the other. Wall Street is cheering and sweating at the same time. The shift. 77% of Tesla's revenue still comes from EVs, but attention is shifting to AI-powered services like full self-driving, robotaxis. Energy business like Megapack battery systems. Can these offset softening car sales? AI bets. Service revenue 11.4 of sales, mostly from repairs, low margin. But Tesla's pushing hard into robotaxis and fully autonomous driving. If it works, margins could explode upward. Energy boom. Only 11.7% of revenue now, but growing 49.5% CAGR over 5 years. Megapack batteries can power 100 plus homes for 24 hours, $1 million plus each. With extreme weather, energy demand, and AI's compute boom, this could be Tesla's true cash cow. Recent trends. Overall revenue down 9.2% YoY. Service up 15.3%. Energy up 67%. Translation: EVs are cooling. Side businesses are on fire. Recent good news. Robotaxis hitting the road. Tesla's testing cars at its Texas factory that drive themselves from assembly to parking, no staff needed. Starting this summer, robotaxis will hit real roads in Austin. Elon's back in focus. From May onward, Musk is spending more time on Tesla, less on government distractions. Policy tailwinds. Recent U.S. government announcements could ease tariff concerns, especially good for Tesla's mostly local manufacturing. Chart watch. Heavy volume this month. Double bottom pattern forming. Sitting near the 200-day MA, Tesla could be gearing up for a breakout. Final summary. If the S&P 500 hits 5,800 this month, we suggest trimming positions and holding more cash. Palantir, nearing peak valuation, reduce exposure before earnings. AppLovin, very bullish outlook, hold through earnings. HIMS, exciting growth plus pharma partnerships, short-term target $50. Tesla, double bottom setup plus bullish momentum, a breakout is brewing. If you enjoy our content, don't forget to like, subscribe, and hit the bell icon so you don't miss out.